Hello viewers, in this video we'll be going over WTI crude oil, ETF ticker symbol USO. So in this video we'll be going over day by day probability where WTI crude oil will head to the next coming days. We'll go over how we found the models and where USO will head to the next coming days. So back to the technical analysis. Today we're down 1.3% on the 1 hour chart. We are still in negative MACD and we made lower lows. And as for the 4 hour chart, we continue to touch the oversold RSI, but we start to see a somewhat of convergence overnight between Monday and Tuesday, but we are still making lower lows. And for the daily chart, we found support on the 200-day moving average, which is this green line, and we still have not reached oversold RSI on the daily chart, and we have the daily MACD pointing downward towards negative, and as you see, these blue and yellow lines have a wide gap in between, meaning that there's no reversal in sight as of now. So at the moment, if we do manage to have a reversal and manage to head higher, the next resistance that I see is the 50-day moving average, and that price coincides with past support, which is around the price of $12.34. And since we're below past support price, that now acts as our immediate resistance. As for support, if we do continue to head down lower, I do see a possible support around the price of $11.93. Reason why, we have the 150-day moving average, this orange line, and we also have price concentration around this area too, past resistance, and since we're above resistance, that now acts as our support. So if we were to move up higher, that price movement is roughly around 1.8% to the upside, and to the downside it is around 1.4% to the downside. So let's head to the day-by-day model for USO. So right here, as the day progresses, we have in favor of a downward, so between 0 to 7% down, we have a 40% chance of it happening. And on the extreme case, from negative 7% to 14%, we have a 20% chance. On the other hand, we only have 30% chance between 0 to 7%, and on the extreme case, for to the upside, 7 to 14%, we only have a 10% chance of it happening. So there is a 60% chance we may head lower and a 40% chance we may head higher in the next coming days. So let's head to the day-by-day probability or day-by-day forecast model. So again, this model is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below it is the trend that I believe is the best match. This trend dates back to June 28th to September 24th, 2012. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we start off slightly below the middle Bollinger Band, and we proceeded to average above the middle Bollinger Band for several weeks at this instance. And next we see it break down immediately, touching the bottom Bollinger Band right at this instance. So we have those points there, and we also see a similar pattern shaping as well. We start off slightly below the middle Bollinger Band at the beginning. Next, we proceeded to average above the middle Bollinger Band for several weeks. Next, we immediately see a breakdown to touch the bottom Bollinger Band. So we have about 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was June 28th, 2012 to September 24th, 2012. Back then, WTI crude oil was down roughly around I would say 4.6%. So if we check back to the day-by-day probability model, we do see that it is part of this standard deviation between 0 to negative 7%, and that is a 40% chance of it happening. So again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.